What if I told you the panic in the stock market right now is actually your golden ticket to becoming a millionaire? While everyone else is terrified of the crashing charts, the ultra-wealthy are quietly buying up the exact same assets. Today, we are going to expose 5 unstoppable dividend stocks currently sitting at absolute bargain prices. These 5 giants have paid uninterrupted dividends for over 150 years combined. But the best part is the massive fortune they can generate for you. Stick around until the very end of this video, because the final stock on this list is projected to turn a simple $10,000 investment into nearly $800,000. It could literally pay you over $6,000 every single month in pure passive income while you sleep. Do not let the current economic fear blind you from the actual math. Let us start with the very first wealth-building engine. Main Street Capital is currently trading just barely $1 above its lowest price of the entire year. The market punished this company simply because interest rates are expected to drop. This is a macro problem, not a business failure. The reality is that this business development company has never reduced its regular monthly dividend. Not during the 2008 financial crisis. Not during the pandemic panic. They have consistently raised their dividend every single year since their initial public offering. Right now, they are offering an incredible yield of 8.7%. They run an absurdly efficient operation with massive amounts of unused cash waiting to be deployed. The dividends alone do most of the heavy lifting. If you invested $10,000 today, the compounding effect would be staggering. Over 3 decades, that initial seed money would grow past $320,000. You would be collecting over $1,500 every month without lifting a finger. That is the true power of a clean credit book and relentless dividend reinvestment. But if you want massive growth, you need to look at our next giant. Sherwin-Williams just finished buying back billions of dollars worth of its own stock. And immediately after, their stock price plummeted to a 52-week low. Why did this happen? Because the housing market stalled, and when people stop moving, they stop buying paint. But amateur investors are completely missing the bigger picture here. Sherwin-Williams owns its entire distribution network with over 5,000 stores. They do not just manufacture paint. They control the entire supply chain directly to the contractor. Even when the residential housing market is dead, their industrial coatings segment keeps printing money. They provide essential coatings for cars, airplanes, and factory floors. This company is a legendary dividend aristocrat with 47 consecutive years of dividend increases. Do not let their low 1% dividend yield fool you. This is a total return story fueled by aggressive share buybacks. They are quietly returning massive amounts of cash to shareholders through the back door. $10,000 invested here is projected to grow exponentially over time. We are talking about reaching over $418,000 by year 30. They make their money on relentless growth rather than simple yield. Now, prepare yourself for a completely unexpected wild card. NetEase is a massive Chinese internet and gaming company. Right now, its stock is bleeding purely due to brutal geopolitical fears and regulatory panic. The market is absolutely terrified of the macro environment. But let us look at the cold, hard numbers. About 1/3 of this entire company's market cap is just sitting in pure net cash. They are generating billions in revenue with massive global gaming hits. Most importantly, over 80% of their revenue comes directly from games, shielding them from ad regulations. Their dividend policy might look strange because it fluctuates based on quarterly profits. However, their 10-year dividend growth rate is an astonishing 22%. Let us be brutally conservative and cut that growth projection completely in half. Even with that massive penalty, the compounding math remains breathtaking. A $10,000 investment could realistically snowball into over $760,000. The share price appreciation alone is a tidal wave of future wealth. They are trading at a dirt-cheap valuation right now. The market's irrational fear is creating a generational buying opportunity. You just need the stomach to hold it while the geopolitical noise fades away. The next 2 stocks on our list are legendary American retail titans. Both are currently getting crushed by the worst housing market since the financial crisis. But that pain is your ultimate advantage. Welcome to the kingdom of Lowe's. Lowe's is currently trading severely down from its absolute high. They are heavily exposed to the do-it-yourself consumer. When homeowners feel the pinch of inflation, They delay their kitchen renovations. But beneath this temporary weakness, Lowe's is actually gaining tremendous ground. They just made strategic acquisitions that open up a $250 billion market in new home construction. This is a segment they previously generated absolutely zero revenue from. Online sales are surging, and their adjusted earnings per share are beating estimates. This company is a certified dividend king. They have raised their dividend for 62 consecutive years. That means they survived every recession, war, and crash over the last 6 decades while still paying you more. With a very safe payout ratio, there is massive room for future growth. They are constantly executing multi-billion-dollar share repurchase programs. The projection for a $10,000 investment here is staggering. By year 30, it could potentially skyrocket to over $813,000. You would be looking at over $4,000 a month in pure dividend income. All because you bought when the housing market looked terrifying. But there is still one final giant remaining. The absolute climax of our dividend journey. Home Depot has paid out more money to its shareholders than any other stock on this list. They handed out over $9 billion in dividends in a single year. Yet, the stock is currently languishing near a 52-week low. The housing market is broken, mortgage rates are high, and existing home sales have stalled. But the underlying business of Home Depot is absolutely not broken. They are actually reporting positive comparable sales in the worst environment imaginable. They are aggressively capturing market share among professional contractors. They have paid a consecutive cash dividend for 39 straight years. Recently, management sent the ultimate signal of confidence to investors. They temporarily paused their share buybacks to digest a massive new acquisition. But they completely refused to touch or cut the sacred dividend. They prioritized paying you cash above all else. The long-term projection for Home Depot is the most lucrative of all. $10,000 invested today could eventually reach nearly $800,000. But the real magic is the massive income stream. Reinvesting those dividends over 30 years does more heavy lifting than the stock price itself. You could secure a retirement income that outlasts your entire lifetime. These 5 fallen giants are not failing businesses. They are simply temporary victims of a fearful market. When the crowd runs away in panic, the intelligent investor quietly builds an empire. It is time to stop watching from the sidelines and start claiming your financial freedom today.